On today's Public Keys at the New York Stock Exchange, we track some staggering ETF flows, including what is now the longest Ethereum ETF inflow streak since launch. We look at why banks are pushing back on the Genius Act implementation, and our crypto market giant just became an asset manager. GSR joins the show to talk about launching its first ever ETF. I'm Jen Sanasie. Let's get into it. Happy Monday, everyone. Bitcoin spent the weekend knocking a very familiar door. Bitcoin was at around $78,000 at time of recording, and it's on pace for its best monthly performance in over a year, up more than 13% in April alone. We watched Bitcoin push towards $79,000 midweek before sellers stepped in just below that $80,000 level. That's the number the market is locked on. A clean break above 80,000 would be a significant signal. We're not there yet, but the momentum is building. Fueling that momentum, Tether's USDT supply has surged in the last 2 weeks. It's now sitting just under $190 billion. When stablecoin supply grows like that, it typically means fresh capital is flowing into the ecosystem. On the equity side, Strategy, ticker MSTR, disclosed that it added more than 3,000 Bitcoin to its treasury, bringing its total holdings to 818,334 Bitcoin. Next up, DeFi is under serious pressure. The $292 million Kelp DAO exploit, which has been linked to North Korea's Lazarus Group, triggered a $13 billion wipeout in total value locked across decentralized finance. Aave lost $8 billion in deposits in just 48 hours. Aave is now leading a recovery coalition called DeFi United to restore the backing of the exploited token, RSETH. This is a story we will continue to track. And here's what we're watching for the rest of the week. Wednesday is massive. The Fed wraps its third FOMC meeting of the year. Markets will be listening closely for any shift in tone on rates. On top of that, Meta, Microsoft, Amazon, and Alphabet all reporting earnings, with Apple on Thursday. We also get Q1 GDP and March PCE inflation data. Any macro surprise could move this market in either direction. All right, another big ETF story today. GSR, one of crypto's largest market makers, launched its first ever ETF last week. The GSR Crypto Core3 ETF, ticker BESO, gives investors exposure to Bitcoin, Ethereum, and Solana in a single fund. Here to discuss is GSR's Managing Director of Asset Management, Andy Baehr. Andy, I miss you, I gotta say.
I'm really excited to see you. It's nice to be back here.
It's nice to be with you. You were supposed to co-host the show with me, then you moved on to greener pastures.
We were here the day of the bullish IPO, sitting right next to each other here, so this is great.
We were here. I reminisce on those days. Glad to have you back here
in
the seat. Nice to see you as well. GSR spent more than a decade as one of crypto's most powerful market makers, now entering ETFs. Talk to me about the product.
Yeah, the product answers the question we all get all the time, right? We've been in crypto for a while. People come up and say, what should I own? And you don't necessarily want to check in with them every 5 minutes and seeing if they're buying the latest name here or there. You want them to own a core portfolio that has the real cycle survivors. So we decided to launch an ETF that answered that question honestly and simply. It gives you access to Bitcoin, Ether, and Solana, just those three. They're named in the product. It also gives you access to staking rewards for Ether and Solana. But the added benefit is that we did add active management. So we changed the weights around to predict where market conditions are going to be to try to eke out extra performance.
Okay, so we have three assets: Bitcoin, Ether, Solana. We have rebalancing weekly. We have staking. Talk to me about why this product, why now, what investors are really looking for, moving from passive to actively managed products.
Yeah, I think the change to this allocation mindset by seeing like the Morgan Stanley Bitcoin ETF, which is clearly designed for long-term allocation in wealth and advisor portfolios, is finally bringing about this shift of Bitcoin and crypto being as well as a trading asset, an allocation asset. And so when it comes time to do that and you really want to own one thing, there's a lot of even multi-token ETFs out there. We didn't think that a market cap weighted product really made sense for a lot of people. It's very Bitcoin heavy. We didn't feel like super broad stuff might be a little complicated for folks. So the core portfolio, Bitcoin, Ether, Solana, is really going to get people off to a good start. We felt that equal weighting was a good neutral way to start, but as market conditions change, those weights will shift. And as you said, it'll rebalance weekly to give the investor what we think will be a chance at earning higher returns.
Now, I started the segment saying another ETF story. You mentioned the Morgan Stanley one, huge ETF story in the past few weeks with Goldman Sachs. ETFs have really become kind of this pillar story driving this industry forward. It feels like all of the excitement is in these institutional products right now. Talk to me about what you think is driving that. What are you seeing as you sit on the other side now?
I've got to say, at first, it's almost like the tokenization and the integration stories where you think, are people just scrambling to catch up, or do they really have an interesting differentiated take here? When the Morgan Stanley product came, it became clear to me, although maybe slower to me than to them, that this was really designed for that channel, and that was what was going to differentiate it. There's 20 ways to buy Bitcoin, but this is the way that's going to make sense for their audience. The Goldman Sachs product, which is a covered call product, there's a lot of option writing in Bitcoin, and Bitcoin's volatility has been really, really compressed, but there's still, relative to equities, decent yield in there, and if they feel that that's the sort of process or the package they want to offer to their clients, then that makes sense. It's funny, skating through all that, GSR says, well, yeah, but what's the core portfolio that you're going to tell your relatives or your friends or people who aren't into crypto every day to put into your retirement account, or an advisor to slide next to passive portfolios? Sort of that's where we were aiming Core3.
Okay, so Bitcoin, I'll leave Bitcoin to the side. Ethereum and Solana are in there. Talk to me about the thesis behind these two products. Is it on the back of stablecoins and this narrative that we're hearing more and more that autonomous agents are going to be using Ethereum and Solana to interact?
It totally is. I think when it comes to crypto, especially for people who want to allocate really and get these two core theses, right? Bitcoin changed the world in becoming this brand new macro asset, a real currency, a real store of value, a real limited supply kind of value proposition that I think most people understand. In the last year, it's been less than a year since the Genius Act passed, and top of fold news, you see tokenization and stablecoins, tokenization and stablecoins, and people think, how do I attach myself to that, right? So the two layer one blockchains on which all of these things, or many of these things, are going to settle, become the real cycle survivors to represent that growth. So you have Bitcoin as a sort of macro asset, which has certain properties, actually something that you probably want a little more of in the portfolio if markets are contracting. And then you have this growth engine of Ethereum and Solana, which are neck and neck trying to sort of own this layer one space. So capturing those two themes of macro and growth, and then rebalancing them actively in prediction of where the markets are going to be, is really what makes Core3 a really solid thing to own that you can count on, and you can count on it lasting a while.
And I guess it doesn't hurt that the SEC has classified Bitcoin, Ethereum, and Solana as commodities.
I think that helps a lot. I think we're still in this area where you have the SEC guidance around the assets that were named last summer that have futures contracts on them or other properties, and it's still kind of a hodgepodge. Declaring them not securities actively, at least from a regulatory policy point of view, is very positive. We hope to make use of that in future products, but it's good for the industry. It does start to challenge advisors. Advisors are now going to be asked to do more than Bitcoin, and the question is, where are they going to go? And we think that Core3 might be at least good for a partial answer to that question for the advisor community.
My question for you is, where is GSR going to go? This is the first ETF. There were some acquisitions recently of Autonomous and Architect. There's, of course, GSR1. Sounds very institutional, like a very institutional future to me. Andy, talk to me a little bit about the roadmap.
Well, GSR, what always impressed me about it was that it really got its name and got its reputation going by being the first market maker a new project was going to use, right? It helped launch things. It famously helped launch XRP back in 2013, and now it continues to be very associated with new product launches and making markets in very new and illiquid tokens. Autonomous and Architect were two acquisitions that happened right after I joined, which helps put a lot more energy and product around advisory, pre-launch, launch, and post-launch services for new tokens, new projects. So that's perfect for us. In my side of the business, and asset management will be right along there to offer them that kind of service. So it really kind of rounds out what really GSR was known for in the first place.
Are more ETFs in the pipeline?
Oh, maybe. We haven't made any announcements yet. We did file for 5 last year. I think some of those are really exciting ideas, and others we may tweak a little bit. But based on the success and the noise around the launch of BESO, which means kiss in Spanish, a nod to our founder, how Core3 is launched, I think that, one seems like a very small number to issue, don't you think, Jen?
Yeah, one does feel like a very small number. BESO means kiss. It also stands for Bitcoin, Ethereum, and Solana. So
yes.
Very clever, Andy. Andy, thank you so much for joining. It was a pleasure being here at the desk with you, and I hope to do it again soon.
See you soon.
All right, that was Andy Baehr, Managing Director of Asset Management at GSR. We're going to take a quick break. When we come back, are the banks trying to slow down the Genius Act? More right after this. U.S. banks are pushing to slow down implementation of the Genius Act, the stablecoin oversight law signed by the president last year, asking regulators to extend public comment periods until the Office of the Comptroller of the Currency finishes its own rulemaking. Here to discuss is Nick Van Eck, CEO and co-founder of Agora, a stablecoin issuer and infrastructure platform that is a direct stakeholder in how these rules take shape. Hey, Nick, nice to see you.
Thank you for having me.
Of course, thanks for being here. All right, let's start with this. Major U.S. banking groups have formally asked regulators to kind of pump brakes on implementing Genius Act. Talk to me about how you're reading this, and from where you sit at Agora, what does that mean for you functionally?
Yeah, so it doesn't come as much of a surprise at all, to be honest. I think these are organizations where they're traditionally slow moving, and this is probably one of, if not one of the most important pieces of banking legislation in U.S. history. And so they are, of course, going to want to slow things down and get ready for what is a large threat to their business model. And I think that's really the story here. I saw the piece that the banking groups put together, and frankly, it's, I would say, not really the real motivation behind trying to slow things down. And I think they'll continue to try to slow things down over the next year. But for us, we're still full steam ahead. We announced filing with the OCC last week and are excited to get things moving in the United States. I think a unified federal framework is going to be great for innovation. It's going to be great for consumers and businesses in the U.S. and abroad that want to start adopting the dollar.
I want to talk about that in just a second, but you said it's not really the motivation. Can you unpack what you mean a little bit more for me there?
Sure, of course. So I think a lot of folks have been following what's been going on with Clarity and how banking groups are trying to slow down market structure and change how rewards are addressed in Genius. And I think that's the real motivation, right, is there has been some concern expressed around deposit flight, right, if some of these issuers are able to pass through rewards. I don't think that's really going to be the case, but that's obviously what banks are concerned about because they have a pretty juicy margin game today where they're giving you a few basis points in your checking account and collecting 300 plus at the Fed, right? And they don't want to give that up, and I think that's the real crux of the issue here, and so they're trying to make sure that that gets nipped before Genius really goes through and into effect.
Well, the new text draft hasn't been seen yet publicly, but I know a lot of firms have seen it privately. I don't know if you have or if you haven't, but I've heard that both sides are not happy and that there will be some stipulations on yield when we finally see this. Talk to me about how you take that in as someone who's operated in this industry. Like, how are you reading that? How does that make you feel as you move forward?
Yeah, so it's nothing that I can comment on, and I'm not aware of the most recent language. Those are battles that are being fought with people that are more important than I am. But I think for us, right, we just respond to legislation, right? My family runs an asset management business, has for decades, right? I think you just need to see what happens and then react to that. And so we're ready in either case, whether it's sort of status quo or things get changed meaningfully.
All right, let's talk about what you already mentioned. Agora filed for a national trust bank charter with the OCC last week, I believe it was. Walk me through what that means operationally for you and what can What can Agora do with a bank charter that it couldn't do before?
Yeah, so obviously with Genius, right? Now banks you have to be a bank to be an issuer of a stablecoin, right? And so for us, it's very exciting because we can now, if we are able to secure a charter, operate under a unified federal framework, and I think interact directly with regulators, which is what's important. We've long believed that you need to be the rails and have that direct relationship to make an impact, and so we're excited to continue to work with regulators, hoping that we secure this charter and then are able to issue throughout the United States and in one sort of federal framework.
There was a quote that stood out for me in your announcement. I'm just going to read it back to you. It's your words. Your ceiling is someone else's floor. Talk to me about what you meant by that.
Yeah, so we have all long believed that in order to win, you need to be the metal. And so a few folks have gone to market and said, hey, we're going to rent a license, right, or use someone else as a middleman. By being the issuer, we're able to get rid of what I think are pretty egregious fees. So today, if you are trying to off-ramp USDC or USDT, you're often paying anywhere from 3 to 10 basis points. That's insane. Imagine if, when you were sending money from Venmo to your Bank of America account, you had to pay 5 basis points. That shouldn't be the case. And so, if we were able to secure a charter, and because we're an issuer, we're able to operate and offer, fiat to stablecoin and stablecoin to fiat for no fees. Mm-hmm. And that's what we believe should be the case. And it gives us the opportunity to get into other lines of business, and really play with those margins. You're seeing many of these neobanks that are coming to market, that are using other people's infrastructure, but they're always going to have to charge those exorbitant fees for on and off ramping. And so you could see us getting into similar types of activities if we're able to secure a charter and do so, and offer really a much better product to businesses, right?
So if we look at some of your competitors who are relying on banking partners for custody and infrastructure, what kind of risks does that expose issuers to? Yeah,
so obviously your underlying financial infrastructure is key. And one of the advantages that we've long had is being institutional grade. So State Street is our cash custodian. They oversee over 50 trillion in assets under custody as of the last quarter. And so they're really like one of the largest custody banks in the world. And so what we tell our customers is your assets are safe with us, right? And Van Eck is the investment manager. Obviously, my father runs that firm. It's a 200 billion asset manager. Been around for 70 years, and so it's really blue chip. And the underlying rails are good. And so that's how we position ourselves, as really being institutional grade for businesses.
Now, talk to me about the timing of this. Was the filing, I imagine you've been working on this for a long time, but was it a direct response to the political environment?
It wasn't, no. We've been working on this for a long time. It's a lot of work, goes into even just filing an application for a bank charter. So, we've been working on it for a long time, and we felt now was the appropriate time to get things in, because our hope is that we're able to secure conditional approval and be operating towards the end of this year. You
mentioned products beyond stablecoin issuance. Without giving everything away, what can you tell me about the roadmap?
Yeah, what I'd say broadly speaking is we are trying to bring the world on chain without them knowing it, because of the benefits of instant settlement, global liquidity, global financial standards. And there's a few things that businesses think of. It's how do I touch and use these assets, right? So custody. How do I operate in this new world while still operating in my old world, and vice versa? I think folks tend to oversimplify that and think just on and off ramps, but it's also like tax, audit, compliance, and then it's what asset am I using, right? And we already have the stable coin. And so if you need all three, you can probably hazard a guess at what some of the other lines of business we'll be getting into are.
All right. Well, Nick, I hope that you come back and you can tell us more about the other lines of business as they are announced. Thank you very much for joining me today at the New York Stock Exchange.
Yeah, thank you.
Awesome. That was Nick Van Eck, CEO and co-founder of Agora. All right, turning now to spot Bitcoin ETF flows. And the numbers last week tell an important story. 12 U.S. spot Bitcoin ETFs pulled in $823.7 million in net inflows, bringing total net assets across all products to over $102 billion. We have crossed the $100 billion mark, and it is holding. BlackRock's IBIT continues to dominate, commanding roughly $63 billion in assets under management, over half of the entire market on its own. And you see sustained inflows at this level while Bitcoin is still fighting resistance below $80,000. That tells you institutional buyers are not waiting for the breakout, they're positioning ahead of it. That is a fundamentally different behavior than we saw in the retail-driven cycles of the past. The ETF wrapper has changed who's buying Bitcoin and, frankly, how this market moves. Now, let's talk about Ethereum because the ETH ETF story is becoming one of the more interesting trends to watch right now. Spot Ethereum ETFs posted $155 million in net inflows last week, bringing total net assets to $13.79 billion. And crucially, this is the third consecutive week of inflows backed by something even more telling at the daily level. U.S. spot Ethereum ETFs recorded 10 consecutive days of net inflows through April 22nd, the longest unbroken streak since these products launched in July 2024. Now, the sustained demand here is notable given that ETH itself has had a rough ride, pressured in part by the Kelp DAO exploit fallout. Here's my read. The fact that institutional money is flowing into ETH ETFs even as the spot price faces headwinds tells you that smart money is treating this as a buying opportunity and not a reason to exit. At $13.79 billion, the ETH ETF market is still a fraction of Bitcoin's, but the data suggests that a sentiment shift is underway. All right, we're going to take a quick break. When we come back, we'll be joined by 21 Shares Chief Investment Strategist Adrian Fritz to unpack more on what ETF flows are signaling and what we should be watching this week. Welcome back to CoinDesk's Public Keys at the New York Stock Exchange. Joining me now is 21 Shares Chief Investment Strategist Adrian Fritz. Hello.
Hello, thanks for having me.
Thanks for being here. Welcome to New York.
Appreciate it, appreciate it.
All right, we just took a look at some pretty crazy ETF numbers before you joined us. Year-to-date, spot Bitcoin ETFs have absorbed roughly $1.1 billion. Now, talk to me what you're watching in these flows, and then we'll dig a little bit deeper.
I would say it's quite constructive. I mean, it clearly shows that traditional regulated investors, they're building their positions. And yeah, especially since the start of the war, we've seen some massive inflows, actually. And as you said, I think it's almost 2 billion now in Bitcoin ETFs inflows year to date. So yes, quite a big number.
Well, talk to me about the composition of demand. What does this look like? Are these new entrants? Are these existing holders adding to positions, folks repositioning? What does the makeup look like?
Yeah, of course, it's hard to say because they are exchange traded. So we don't always know who sits on the other side of that trade. I would say, of course, regulated traditional retail investors getting back in or feeling more comfortable building a position. Of course, the institutional adoption is picking up as well with the good news of Morgan Stanley, all the traditional asset managers entering the space. And then lastly, hedge funds. I mean, of course, especially in the US, they're beloved by hedge funds, riding the basis, arbitrage, option strategies. Of course, they use the ETFs that have immense liquidity to play those strategies.
I was talking to Andy from GSR earlier about ETFs really kind of driving the narrative. Of course, it's really been an institutional foundation for crypto lately, but ETFs have been one of the real big drivers, a lot of big stories coming out. From your perspective, what flipped? Was that a switch that flipped, or is that something that's been slowly building?
I think It's been slowly building. I mean, it takes some time to get really comfortable with this new asset class. Of course, just because those products launched beginning in January 24 doesn't mean that everyone's just jumping on it. I think it takes a lot of educational effort and understanding to really get comfortable and also see how it fits into a multi-asset portfolio. Of course, people always struggle. Is it correlated to that? What about the volatility?
Right.
But I think people are starting to get it, and that's why they're entering the space.
Now, I know that you make the case that Bitcoin now rivals liquidity of mega cap equities like Nvidia, with daily volumes exceeding $50 billion. Talk to me about this for a traditional portfolio manager who still thinks of crypto as illiquid, maybe still a little bit exotic. What's the strongest argument you have here?
I think it's the number that you just mentioned, of course, especially on the Bitcoin side. It is one of the most liquid alternative assets, and that's why it's institutional ready to, be part of multi-asset portfolios. And yeah, the ETFs, because of their primary and secondary market, of course, they have the right setup to really provide that necessary liquidity.
We took a look at the price of Bitcoin this morning when we started recording. It still hadn't broken $80,000.
Yeah.
I believe it was sitting at around $78,000. I know you have 5, I guess, catalysts of sort that will help Bitcoin break that $80,000 level. Very quickly, just outline them for me.
I mean, there's a few, of course. I would say a resolution in regards to the war would help drastically in regards to sentiment. Then watching the ETF flows, I think that's that structural demand that keeps on building up. What's interesting to see right now, funding rates on perps are negative. So, of course, that has to do with a lot of hedging, but every kind of spike to the upside could create a little short squeeze as well. Overall, just how the adoption is taking place. So I think it's a constructive picture, but I think we're still in a bear market. It looks like a bit of a relief rally. Of course, we're struggling with this 80K level. I think the 200-day moving average is kind of like the next key level between 85 and 90K. If we break above that, I see a lot of hope for a true reversal. But for now, we're still in a consolidation phase.
What does a lot of hope look like?
What a lot of hope looks like?
Yeah.
Just the things that I just mentioned. If they come together, we see some price action to the upside and really have a confident breakout above that 200-day moving average. I would consider that hope.
I guess what I'm getting at is if we break 95,000, what's your price target?
Price target for like the end of the year?
Well, if we break $95,000, we see that positive upside.
Yeah.
We see some of those catalysts happen. Where do you see Bitcoin? Yeah, let's go by the end of the year.
By the end of the year, I would say we're still in a consolidation phase with a bit of fragility. So I think it takes some time until we're through that phase. But by the end of the year, I would say maybe we reclaim the 100K around that level.
Okay,
I'm conservative with that, but I think that's how we see it.
Okay, I'll take that. I want to zoom out from a macro perspective as we head into the week. What are you watching? What should investors be watching?
I mean, of course, it's still very much macro-driven. On the macro side, we have a lot of big announcements. We get the PCE numbers, we get a Fed decision as well. Of course, we're not expecting a rate cut, but overall, it kind of sets the tone for what's going to come next. And then oil. Oil is still the driver. We're still below that $100 mark, but I think if that spikes or there's any kind of like escalation, that would hurt risk on assets and Bitcoin as well.
We do have the FOMC meeting. Kevin Warsh had his nomination hearing last week. How are you looking at Kevin Warsh coming in to the Fed this year? How may that change or not change what we're looking at when it comes to rate cuts?
I think there's a lot of expectations that he sets a bit more dovish tone going forward. Of course, we know about his past. Let's see if he follows through with a different mindset. But overall, it remains to be seen. I think we're quite hopeful that he steers us into the right direction. But yeah.
Okay, and lastly, before I let you go, you are the chief investment strategist. Give us a little bit of alpha here. What assets are you watching? What's really interesting to you?
That's a very good question. In the crypto space,
Yeah.
of course. I mean, at the moment, yeah, the big spotlight is on Bitcoin. I think it drives the entire narrative for the entire industry, actually. ETH is struggling a little bit, but also the underdog. It had its worst Q1 ever.
But ETH ETFs had a 10-day inflow streak.
Exactly,
The best-
exactly.
Yeah.
I was coming to that, so maybe that's kind of something to watch out
Yeah.
because we had that consolidation. And then the altcoin space, we think the altcoin season won't come back like
Ever?
it was in the past, no. Because in the past, usually there were liquidity events, while now investors are much more careful and take almost kind of like a equity
Yeah.
analyst approach. But there will be some winners and we will see some rallies. And of course, the standout protocols right now, Hyperliquid, especially in conversations on our side with traditional investors, it's a very compelling case because it actually, drives revenue, it generates cash flows, and that's something they can grasp or even put a valuation framework on that. And therefore, I think stories like that will continue to follow through.
Altcoin season not coming back. What does that mean for some of the ETFs that hold some of these altcoins?
I would say, eventually, and I think it's very normal in the ETF space, some of them will be closed. Of course, it depends on the underlying project by the end of the day to make it work, to build their ecosystem, and a lot of them fundamentally don't have a lot of strength, and that could be reflected in ETF flows as well, and eventually some of those products will be closed,
Adrian, thanks so much for
It's been a pleasure.
joining the
Thanks
show
for having
today.
me.
Of course, it was a pleasure. Thank you. That was 21 Shares Chief Investment Strategist Adrian Fritz. All right, before we go, let's take a look at the Crypto Fear and Greed Index. It's sitting at 47, right on the edge of neutral. That is up 20 points from when we looked at it last week. When it was at 27, it was in fear territory. The fact that we've moved that quickly towards neutral tells us that confidence is returning to this market fast. Historically, the best buying opportunities come when everyone is fearful. So if you missed last week's entry, that window might be closing soon. That's it for CoinDesk's Public Keys at the New York Stock Exchange. I'm Jennifer Sanasie. Thanks for watching, and we'll see you next week.